And this has helped propping up the pound. So the pound may move slightly counter to what the Aussie, the New Zealand, the CAD, and the Euro. It may actually stabilize here, and you can see the predicted short-term difference already pointing higher. The predicted medium and long-term differences, they're starting to turn up in heavily oversold territory. Our predicted true strength indicator and our predicted MACD are completely oversold here. So a possible turn here on this pair, we may be seeing that. You can see the predicted moving average from Vantage Point also starting to turn back up. So in this particular case, you know, we'll monitor this one. This could be a good counter trend long during a corrective move on the dollar. And again, as long as those cross pairs continue to support, my concern is that Bank of England may be looking at cutting rates, and this could put again further downward pressure also on sterling. So we do have to be certainly a little cautious there. Silver, I don't think anything needs to be said there. Silver just getting hammered with the equity markets. As those equities start to turn lower, silver doesn't stand a chance. Silver, in my opinion, is far more correlated to the S&P 500 than it is to gold. So, you know, you've seen those moves before where gold was kind of turning lower, and as the equities were, you know, gold was moving higher as the equities were moving lower, but the silver wasn't. Silver was actually following the S&P 500, and this is again the benefit of doing intermarket analysis, both with the Vantage Point software and in real time, because then you can see these correlations in real time, and you can watch one market can clearly be a leading indicator for another. Silver, we're not oversold yet, so we do have further potential to move to the downside. So again, be careful of just jumping in there, and because it's so low, is this a good buy? I'm not convinced of that, so we'll keep an eye on that one. Finally, coming into the Euro-US currency pair, obviously this one under significant pressure. Now what we have to do is again look at these key upward pivot resistance points: 138.19, 136.44, and 135.37. 135.37 represents the first level of resistance. My opinion is it's going to push higher, somewhere between 136.44 and 138.19. You can see the predicted short-term difference starting to turn up. We're again in heavily oversold territory here. So a little bit of a relief rally with the equities and the euro entirely possible. So don't get too aggressive with shorts down at this 135 level just yet. Let the week get started, and again, once we have a better picture on things, we can go from there. Now, the New Zealand-US currency pair, identical to the Aussie-US, clearly under pressure here, taking out the major levels from Vantage Point. On the upside here, we've got 81.78, 80.53, and 78.76 with a close of 77.60. So these are your upward resistance points to start the week. Good areas to likely sell into. My concern, again, looking at the predicted short, medium, and long-term differences, they have a dual purpose. They tell us the strength, and they also tell us when something is overbought or oversold. Clearly here it's telling me we are very oversold. So we're going to get probably a relief rally here, probably back up in towards this 80.53 area, where I'm sure most people like myself, your sellers, are going to be camped up there just waiting for it to come up, and then they're just going to slam it lower. So keep an eye on that one. I think that's a good short, but just let it work off this oversold condition right now. US Swiss franc, another very good trade here, 86.56, 88.85, and the key level 90.16 with a close of 90.54. We're going to probably move, I would imagine, between these two predicted moving averages, probably around the 89.50, 89.75 area. Decent area to get into to start your longs to begin the week. Once we work off again the volatility that's going to start, you can see the predicted short, medium, and long-term differences really scattered all over the place here, but they're above the zero line, and the predicted MACD and the predicted TSI, again, we're overbought again, so expect a corrective move and then use that to get into your long position. Now, sorry, this is our final pair here. We've got two more pairs to go, excuse me. The US-Canadian pair, again with my own clients, repeated longs, counter trend shorts, very dangerous. We've played pretty much a yearly range, I would say, between 99.50 and 94. That was the overall long-term range. That range was not just broken, it was shattered this week, and we've gone all the way up almost to 104. So my opinion is we're probably going to see a new range on the US CAD, probably between parity and 105, 104 to begin for the next few months. As long as we stay above parity, the new uptrend in the US CAD is likely to remain in place. 99.62, 1.0057, and again 102.11. I think 102.11 will likely hold to start the week. We've closed at just under the 103 mark, so buying down off this 102 level, that's a pretty good way to start the week in my opinion. After, once we work off that oversold condition in the oil and in the equities. But again, if the market gets really aggressive here and gets very nervous and the big funds start bailing out of some of their commodity positions and their short dollar positions, then the US CAD could break through that 105 range easily. A dollar yen, we've basically talked about this in the yen currency futures, and what we're looking at here is very significant support at the 75, between 75.80 and 76. I'm still recommending longs down at this area. Probably they're going to run stops at some point here. I can't be sure of that, but certainly the Fed and the Bank of Japan and Bank of England are clearly on high alert to help assist the Bank of Japan. Japan cannot afford to have this currency at this level. A more realistic level for this currency right now, in my opinion, would be the 108, 115, somewhere in that area. It certainly shouldn't be at 76. But this is the problem, again, with fundamental analysis and not taking technicals into consideration simply doesn't work. The fundamentals do not support a strong yen, but the technicals do. The bottom line is the market views it as safe haven, and they have for a very long time. So this could push the dollar yen lower despite the dollar strength. And we can see this as the dollar index goes up. The dollar yen is not going up. That is certainly a concern. But in the interim, very good scalping opportunities for us. I trade it pretty much 7-8 times a week, 30, 40, 50, 60 pips at a time. Nothing pretty, but it certainly does pay the bills. So with that said, this is the Forex Weekly Outlook for the week of September the 26th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.